Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of ChargePoint, ticker symbol CHPT, which closed on the day, Monday, January 29th, at a price of $2.04 and had a pretty strong start to the week, being up more than 5% on the day. But before I get into where I think the price might be going, I want to go over where it went over the past week, following up on last week's video, which came out on January 22nd, so last Monday, when we saw this gap to the upside, which does leave a gap now that needs to be filled at a price of $1.76. So, if we fill that soon, we can leave it behind us, and that would be great. But I do think that there is some strength in the stock. So I do think it might be some time before we fill that gap. And so following the more than 12.5% move up on Monday, we did get a continuation higher, opening on the 23rd, so Tuesday, at a price of $2.04, being above this red line that I have drawn here at $2.03. And so in the last video, I had suggested that it would be good for us to be seeing multiple closes above $2.03, getting some consolidation there, forming a bull flag before continuing higher. And so we did see the start of that on the 23rd with a close on the day of $2.16, which just so happens to be the 382 retracement from the Fibonacci retracement that I went over in last week's video. And I should note that in that video, I accidentally had the bottom of it 1 cent too low. So the levels are a tiny bit off, but this is precise between the high on December 15th and the low on January 19th. And so with that Fibonacci level, the 382 at $2.16, I do think that suggested that we did get a rejection from that level on Tuesday the 23rd, but then the following day on the 24th, Wednesday, we opened well above that level, opening above this orange line at $2.22, having an open price of $2.24. But we did move down more than 6% on the day, and we actually closed lower than the previous day's open, closing that day at a price of $2.03, so right at this red line, which does appear to be above this volume shelf as well, so potentially good, potentially strength there. However, since the close was lower than the previous day's open, this was a bearish engulfing candle, suggesting further downside. And that's exactly what we saw the following day on Thursday and Friday of last week. Looks like we got kind of like a spinning top candle here, and then an inverted hammer candle, which could have suggested a reversal since it was at the base of this downtrend, and that is what ended up happening, being up more than 5% on the day today, January 29th. Also closing above the red line at $2.03 with the close at $2.04. So I do think that's really good. And also, if we do zoom in on the chart, all of these levels that I went over in last week's video, we only got one close below them. That was on Friday of last week, and that was the lowest close that we've seen. So the close of last week was at $1.94, right around this line that I have drawn at $1.95. So I do think that, if we don't see closes below $1.95, I think that's great. I think that that could show that what we're seeing now is bullish consolidation, and that we could see a continuation to the upside either over the course of the rest of this week or perhaps next week, as long as we're not closing below 194. We don't want to be putting in new lower closes. Also, we don't want to be getting wicks any lower than what we've seen. So while this was a green day today on Monday, we did get a lower price of, let's see, $1.86, which was lower than the last two trading days. So we don't want to see prices going lower than $1.86. that would suggest further downside. So keep an eye on closes below 194 and prices dipping below 186. Both of those could be bearish signs. Hopefully what we see tomorrow, like what we're seeing just a tiny bit in the after hours, hopefully we see a continuation to the upside and we're able to hold above $2.03, confirming above that with strength, no bearish engulfing candles. We don't want to see any of that. We want to see some consolidation here before continuation higher to reclaim $2.22, as well as $2.42, levels that I have noted as being significant, and then getting back to $2.50, which we've seen in Max Payne's a number of times, which I've said before, I feel like any price below $2.50 for ChargePoint is a bargain. And so I do think that we are still experiencing a sale, and I do think that we will start to see prices rise up to $2.50. However, I should note that Max Payne for the next few weeks is $2. We no longer have a $2.50 Max Payne, so do keep that in mind. But, as we're trading around $2 now, it's quite possible we could be closing the week below that, being below Max Payne. But if we close the week higher than $2 above Max Payne, that could trigger a gamma squeeze, which could bring us back to $2.50 or these other higher levels like $3 up here. And so that's what I'm looking forward to, and I hope you are too. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.